Good afternoon, traders. This is Christian from Hertz Traffic Trade Group, and today is the first trading day of October. It is October 3rd. Welcome to today's market recap. Before we get started, we are running. It's a last day of our a special. We're doing a quarter end or fourth quarter special for new members. If you haven't been a new member and you want to get involved, I think this is a great time. Personally, I think right now is a great time to get involved in the market, whether or not you're trading actively or if you're starting to participate a little bit. I think now I don't know if this end of the year is going to be super strong, but we know that this seasonality does improve as we go on, and we've already had a decent move down in the market. So depending on what your feel is for the market, I find it interesting. Even before we get into today's recap, the sentiment is so negative out there. Anything I post on Twitter, if it's slightly positive, I hear people, people get very negative on me. So I think we're kind of at a little bit of a tipping point personally with the negative sentiment. And there's a reason for the negative sentiment, right? The price action has been pretty horrible. The price action was horrible in the month of September, and yeah, I mean, a lot of things breaking down, a lot of things going a lot lower. So but regardless, I think it's a great time to kind of get involved. And if you weren't really trading with a process, we are very process driven in what we are doing on a day-to-day basis, right? I mean, for example, everything that we do, right, has price targets already somewhat established, as well as stops are always established on the onset of our trade. So we know all of that before we get into a trade. We also do a lot at analysis of how much exposure that I want to have in this market. A couple of people, because I do put out my trading results every month. I also on publicly, and then also in the room, you see all of our trades real time, right? And I bring up actually the trading blotter every one of these videos, just about every one of these videos. Sometimes I forget, so I'm not going to lie. Sometimes I forget to bring up trading blotter, but and then of course members get an end of day file with what our positions have on it. But I got questions this weekend. Oh geez, what are your top positions? Well, you figure that out if you've listened to just a couple of my end of day videos. That I've been pretty much sitting in a lot of cash, and that has been really a help when we've had a lot of volatility here and there, is that I often do get my cash balance back over 90%. But yeah, I mean, you don't have to do much investigative work to figure that out. Regardless of that, that's a special that we're running. It's 35% off the member price. And this way you get, October, November, December, you're here for the end of the year, and you get really a good flavor if this is something that's going to work for you. And again, a community of traders, it's kind of a little bit of a buddy system where we do have certain traders that will kind of help out other traders when they're kind of starting along, and or just have questions about, hey, take a look at this chart, tell me what you're thinking, that kind of deal. All right, so that said, that's our special. I will retweet it out one more time, but you can find it on my Twitter feed from this weekend, from Sunday morning. Risk disclaimer in front of you: everything that we are going through is for information purposes only. I'm not giving out any advice or recommendations. I don't give out any advice or recommendations in the TTG trading room. I just basically provide setups, and I take some of the setups. And we've talked about that a lot, especially before we got into this week, about, thinking about this in terms of how a professional poker player plays, right? If you're getting a lot of twos, or if you're getting a lot of low cards and you're high card, regardless of that, I don't know if anybody saw that Twitter video that was put out about a poker tournament with someone having a high of a jack, right? Well, that's unusual to win with the high, with your high card being a jack. So most likely in those situations, we're going to discard, and we're going to basically wait for better looking setups. So let's get into today's recap. Do we have some better setups? Well, I think we clearly had a different day than what we experienced mainly last week. The question is, right, because it is the first day of the month, usually that there's some new money being put to work on the first day of the month, right? Pensions, big institutions, they usually do put more money together, put more money to work on the first day of the month. That's just a mechanical type trade. Now, there isn't a second trading day of the month that they put money together, but usually the beginning of these months have been a little bit easier, right? And you could look at last month for that, for example, right? If you go back to September, right, the first trading day, I think the first trading of the day of the month was here, and then we did kind of ramp a little bit, right, into about the 12th of the month. So would I be surprised that we do that in the first half of the month? Maybe a little bit surprised, because this market has just been so difficult to get it going. And we do have a few small technical changes, but not much yet. All right, so let's go through. And we'll go through the performance. S&P was up 2.6%. The Qs were up right around 2.4. The small caps were up a little bit more than that, 2.7%. And then where did the mid caps end up for the day? The mid caps actually outperformed. I don't quote the mid caps every day, but I just thought that they're showing a tiny bit of strength. So I'll go over that with you again. And again, the breadth was strong, right? So if we look at the pure numbers of the breadth for the day, right? You have the S&P up 487. You had 487 advancers and only 14 decliners. 2145 on the Nasdaq side, 656 decliners, and the Dow 29.1. So again, strong breadth. But again, I would make sure that you understand that one day is not a trend. Certainly, we have seen that. I don't want to say countless times in 2022, but we've seen it a lot at this point, where we've had one day and it looks great, and then there's no follow through. So yes, I'm a little bit of a doubter today, but we've got some levels to watch. So let's walk through the indices. And again, I can't believe I'm so many minutes into the video and I haven't talked about bonds yet. But this is the start of it, right? Or this was one of the reasons why I think also that equities were strong today. We finally saw a bounce in bonds, and it didn't get too far faded. So we are kind of recouping a little bit of territory, right? We started with this last week back on 9/28, where we had a reversal day in bonds. We stopped right at the 5-day moving average, which I think is important to note, because that is the short-term trend. Even on Friday, it looked like we were trying to turn the corner, and we still closed below the 5-day moving average. And that was pretty frustrating. Besides it being at quarter end and month end, which is tricky, but even bonds were tricky on Friday. So today we are recouping the very first thing, right? We're above the 5-day moving average. We also got into the new value areas. So you hear me talk about value areas and volume at price quite a bit in these videos. We have a new value area for the October, and that's on all the charts, not just the bond chart or the index charts, but for single names as well. For anything, new value area, which is based on September's price action. And volume, price and volume, right? So this will stay static for the whole month, and we're now inside the value area. So I like this. I like that we didn't stop, at the 5-day moving average. We didn't stop right at the bottom of value. So I'm being a little bit positive here, because that is a turn. Now, next up would be we've got a lot of overhead resistance. So we've got the 20-day moving average. So I wouldn't be surprised too if we back and fill a little bit too. And I wouldn't be surprised if we go lower too. We just kind of have to adjust to that, right? There's nothing predictive in here. It's just basically saying that, hey, we've got a level now to trade against. It is significant that we got inside value. And let's see if we hold it. Okay, so that's bonds. Of course, the other thing too, before we move over and start going through equities, but the dollar has been coming off pretty decently. That's the 4th day in a row, and pretty good volume too, right? That this thing, again, it's too early to say if that's a blow off top. We might find support here at the 20-day moving average, as we talked about in the weekend video, and we'll see how it goes from there. But overall, one of the things I know that this question comes about because we go over it so much in the trading room about what bonds are doing. they don't have to, it doesn't have to be a one-for-one relationship, meaning whatever bonds are going to do, equities are going to do. It's just a situation when the volatility in something like bonds increases significantly, which it has. Equities are going to kind of pay attention to that very closely for the time until that changes, right? Until the volatility quiets down, right? But at the end of the day, equities want to do what they want to do, right? They do have a, a mind of their own to some extent, right? And they tend that correlation between bond for some reason I can't bring this up. I don't know why. There we go. Right, so that correlation will change over time. Right now it's very high between what bonds are doing and what equities are doing, but the more that bonds kind of settle down a bit, and same thing with the US dollar, the more that that settles down a little bit, then the correlation begins to separate between that and equities. And you'll find that if it does, if the volatility does kind of come in those two areas of the market, you will find that you'll be looking at bonds a little bit less. One of the things that I stress right now, as always, I always think bonds are important. They just get more important when you have something like this go on, right? And when you have something like this go on, where rates are really going higher, because it's going to affect stocks more and more. All right, so that's a lot to talk about there. So let me keep going here because I want to go over what we're seeing now in the technicals in S&P. So again, it's a little bit of a fight with, are we going to turn the corner? Because we had so many of these days in here where it looked like it was a possibility and we just didn't really get much traction. But we did close back above the 5-period moving average, and we'll see if we get some follow through. In the overnight session, we came so close to taking out that virgin point of control, but it did not get taken out. We don't know if it gets, if we see this revisited. One possible thing that we could see is that we rally up to the bottom of value and it could get rejected and we start going back down there, right? That is the one scenario that we could see, is a move up to here and gets rejected and then starts heading back south again. Another possibility is we actually make it into the value area. And we can kind of look around at some different things, and you could see some things have already done that. But 37.46 is definitely going to be a level to watch for S&P. Also, to start the day, we rallied up to the bottom of value. I didn't know if we were going to make it in for the day either. We did. We got above midday. We were right in the middle of the value area, and we actually made it all the way through. So that's the 80% rule. When you start outside the value area and it's a reasonable value area to get through, and you establish yourself, there's an 80% chance from going one side to the next, to the other side. So we did, that was complete, 37.03. So that'll be something to watch for tomorrow. And of course, S&P futures trade in the overnight market. So we'll see if price can get above that. So again, that would be another positive. But right now, it's basically, it's baby steps right now for this market. So we can look at NASDAQ futures, or we can look at the Qs. We'll do this backwards this time. Right in the 1-hour chart, you could see that we are inside value, and we can, we'll just have to kind of go from there. Resistance will come at, sorry to flip the screen on you, 270, right around 277. Right, and we also did close right at the 5-day moving average, so not as strong as S&P, but I wouldn't say that we got rejected there. We just stopped at the 5-day moving average. All right, and then IWM, and that resistance is 277.75 there, so it's very close to the same resistance on the 1-hour chart. Again, we use multiple time frames. All right, so here's where it gets a little bit more interesting, in my opinion. IWM outperformed. We saw a little bit of this last week, but the selling pressure was just too much last week. But we saw this a couple days last week where IWM was actually outperforming. So notice the other two indices, S&P and the Qs, are below value. This is inside value. So just like bonds got inside value. So 168.13, and I am a little bit long IWM. I decided to try this for a trade. I don't want to just watch. I want to participate. And so I got long right in here, a little bit late in the day too. That's fine. So what I would be looking for is for a move basically up to 172.89, and then kind of we'll see what happens when we get here. ultimately 178 would be a great trade. That would revisit the point of control for last week. That would be my ultimate target in the trade, but I don't know if I'll be able to sit in the trade that long given the overall volatility that we're experiencing right now. Keep in mind the VIX is still at a 30. So again, you kind of just have to understand that the VIX being that high, there's still a lot of turns, twists, and things that you can you can get caught in. So that's important to know, that the VIX, even though it declined how much today, for about 5%, the VIX fell today, but still 30 is nothing to joke around with. Okay. All right, there's that rule of six, what is it? The rule of 16, right? So we're still moving around 2% a day, right? That is high volatility. All right, and then the other thing I was going to go over, which I don't go over in every one of these, certainly don't bring up the mid caps too much, but they're also inside the value area. And there was a chart that I put out earlier based on what it's starting to look like. I do like to look at these relationship charts, right? When you're putting one name over another and looking to see what's outperforming. What did I do with this? MDY SPY, right? So you got the possibility of this, right? So it's important. I see a lot of people from time to time. So again, it's kind of hanging and going sideways a little bit, but we want to watch to see if the mid caps and the small caps begin to really kind of get out of this channel. When things go sideways like this, it means that they're both kind of doing the same thing. So let's see if we get some outperformance here between the mid caps or the small caps and the large caps. I would find that relationship quite interesting, but we'll see. I don't like to anticipate things. I saw this weekend, and this seems to be a favorite of people when they're looking at a possible head and shoulders pattern, right? A lot of times they're looking at it very early in the pattern, right? The right shoulder hasn't even formed, and they're thinking about a head and shoulders pattern, whether it's a head and shoulders pattern or an inverted head and shoulders pattern. You have to wait until the neckline breaks, right? So you can anticipate, just like I'm looking at the relationship here, but there's nothing yet, right? And that's something we'll come back to. But I see it sometimes people actually put on trades because they think that they're seeing a head and shoulders form when it's not even close. So if you're using patterns, in my opinion, wait until the pattern is complete, right? You don't have to wait. You don't have to think that you're going to, find these things faster than everybody else and get in, right? Wait until you actually have the pattern, in my opinion. All right, so that's a lot to talk about, the major indices, but there's a lot of things going on there. So what was particularly interesting to me today too was, I looked at gold this weekend and I actually wrote a Substack piece on it. And I said, hey, I wasn't ready for it yet, right? We last week gold outperformed. It was up 1%. The gold miners were up 7%. So the question that I thought was, hey, are these things going to start to outperform? And we are seeing that. Gold was up 2% today. And, I've been so kind of, for the months past, kind of disgusted at this performance in gold and silver. But hey, look at this move, up 9% and closed on its highs. So I think there may be some trading opportunities here if you're okay with a couple counter trend trades, right? Again, I'm a trend trader. I don't usually trade much unless we get into uptrends. But, if I were to pick one or two names out of the group, and as long as you have a stop price, that's the most important thing, right? I was talking to a couple people. I saw some Twitter comments, and a couple people said, I'm so long some of these silver names. And I'm scratching my head. I'm like, how can you be long these silver names? They're in such downtrends. So at the very least, I like to wait for the 50-day moving average in a downtrend to be taken back. And this way, you're not caught, right? You know exactly where to get out of the trade. That's important, right? We don't want to warehouse trades and think that we can't ever sell them. That's not trading. So now you finally have a signal. So forget about all this, right? Or even trying to time the bottom. That's not what, to me, that's not what trading is, right? Trading is waiting for a little bit of confirmation. And it depends. What do you, when you look at a chart like this. What are you looking for, right? Or what would I be looking for? Well, I would probably be looking for a move maybe up to 36, even better 38. But I don't need to time, I can wait for this to materialize. And then, so look at the difference. I would be looking for something up at 36, and my stop price would be just below the 50-day moving average. The most I could lose would be about $1.50 or $1.50 or so on this trade. And the most I could make, would be about $4 or $5, right? That's the right way to look at things. If you're buying something here, what's your support going to be? Maybe it's the lows, but it's very, very difficult. But so I think that this is interesting. Switching over to the gold miners, Newmont would be one, because listen, this hasn't gotten over the 50-day moving average since all the way back in April, right? That was at 73, stocks at 43, and now I know where my out is, right? It's at the 50-day moving average. So again, these are counter trend trades. These are not my favorite type trades. Certainly, we saw a number of areas come to life back in June. I guess back in June, but they ran out very quickly, right? I mean, they made a move, and then they came back. So they're much trickier trades, because even a move over the 50-day moving average doesn't mean it's out of a downtrend. This would be if it's out of a downtrend, the 200-day moving average. So we saw a lot of that. It looked like possible, level 1 phase going to level 2, and many names just went right back into level 1. So regardless, I'm going on a bit here, but Newmont would be something I'm interested in. Also, energy was very strong today, right? I'm still not convinced, right, that with these energy charts, especially crude, which had a nice day today, that's in a downtrend, right? That's below the 20-day moving average, even though a lot of energy stocks are still above downtrends, right? We saw a really nice call spread go on in this Denbury, which I know a couple TTG traders have been in for a little bit, but I think it was the November, I think it was the 95-110 call spread that went up. So there was some institutional positioning, it looked like, in this name. And this name was rumored to be a takeout name. So, there might be something to that. I don't know anything, but that's something I would be watching. Oxy test back to the 50-day moving average. If you bought this thing on the bottom, you now probably want to be selling some at 64. Because that's been a pretty good place to be doing it before, right? It's been kind of going up and down. Here was a nice move out to highs, but I would watch what it does at this 50-day moving average. The coal names continue to be my favorite out of the energy. CEIX, which was a name from the TTG weekend watch list, also was a name that we talked about last week, back and filled a little bit, had a nice move, still has to get through 69.50, right? And then AMR is another one too. Kind of looked like it broke down a little bit, retook the 50-day moving average, and so on and so forth with some of these coal names. Arch had a big day. BTU, which is a name that we also see a lot of call buying in, also, not a bad looking move. Outside of that, if you look at the performers, so this was not what I was thinking coming into today, to be honest. I thought we would see, a little bit of outperformance by biotech today. We did not see that today, and that actually underperformed. It actually sold off. One name that I was lucky to get a target in was VRTX. This is a name that I put on about a week and a half ago. I did take a target, right? Again, mapping out our targets, 1 hour VPOC taken out. I actually sold this a little bit shy of that because I tried to get the target earlier today and just missed it. So once it kind of returned to that level, I made sure to get it this time around. I'm still long a small piece of VRTX, but I would be worried that this thing fades back down on that 1 hour VPOC. But yeah, that wasn't where the outperformance was. It was much more in the metals and mining space. A lot of names in this group have gotten absolutely obliterated. So yes, this is a huge bounce today, up 7%. But I'm not too sure that you're going to get much more out of this. This was a name that I was looking at earlier, up 11% today, Alcoa. So great for a day trade. And by the way, names and downtrends, they're great for day trades. but they're not really great swing trades because it's going to be a process to get through some overhead supply. So it did make it through the value area. I looked at it earlier, right around like 34.70. It went up another $3 from there. But this is a good place to probably take some profits in the short term because that's where it stopped last week. Kind of did a similar move. All right, so that's Alcoa, and a number of metals and mining names, also did pretty well today. Nucor was up 7% today. This is a name that's really gotten beaten up since they warned about their quarter. Finally gets a move back. Outside of that group, right? I think Posh had another good day today, right? That's become a fan favorite. It did take out a VPOC. I think we may have went over this in Friday's video. A few other names that I was watching today was WWE. Right, had a nice move. This name actually hung in there a few days. It just gave a lot of teases in here that it just would not close, where it was trading earlier in the day. So a lot of fake outs today. Not a fake out. Got going today and up about 3%. Another one too is DGII. This came from the weekend watch list. Sadly, I did not pull the trigger on this one. But really strong. I was watching this right at the top of value, 35.15, took my eye off of it, and it came up. So we are seeing some participation in the software space. Last week for me, CALX was a nice winner. I haven't returned to that name since, but I think that you're finding some names that are showing some strength. Aspen is the strongest name in this group by far, in my opinion, up another 2% and out to 52-week highs. Not too many software names up at new highs. So again, I would rather stick with the strength. There's something different going on in this name. I don't know exactly what it is, but it's very strong. MODN also, the chart looks pretty good in that one. All right, guys. So that is it. We'll go from there, right? And then here's my trades from today. ALB was another name. I did want to participate in this move that we were seeing in commodities, right? And this one triggered for me. The trigger was the top of value. I had to be a little bit patient with it, but it did come out here, and I did take a target at 274. My next target will probably be somewhere around 280, as long as it stays above 271. All right, so as you can see, I didn't do any, I didn't over trade today. I was fine, just kind of, watching and observing, looking for good setups, and and we'll be ready to go if we see some continuation. I did get long the CEG. It's been one of my favorites over the last couple months. So, I like the move off of the 50-day moving average and the 20-day moving average as well. And a nice pop here. Let's see if it can get to the top of value, which would be right around 88. Guys, have a great night. Again, check out the special if you haven't already. And I look forward to seeing you in the trading room. Have a great night, everybody.